Three Singapore banks, DBS, OCBC, and UOB have been a big beneficiary of higher interest rates since March 2022. In fact, they have all increased their dividends in line with the earnings boost. So in this video, we're going to review the Singapore Bank's latest third quarter 2023 results, and I'm going to share with you which bank is my favorite one out of the three. First off, let's look at their recent financial performance. We can see DBS and OCBC have performed relatively well on a core net profit, up 18% and 21% respectively. UOB, on the other hand, had a rather muted 5% growth due to higher allowance for credit and other losses. As for the net interest margin, the three of them are relatively on par after breaching the 2% mark recently, due to the higher interest rate hike from US finally taking effect. And finally, the cost to income ratios, which measures the operating expenses divided by the operating income. Pretty similar with the three of them, with UOB just aging slightly ahead. Next up, let's look at their financial matrix. One important ratio for banks is the ROE ratio because it shows how efficient the capital is being utilized to generate profits. In this picture, we can see that DBS Group 18.6% ROE is way ahead of the other two banks of around 14%. This is because DBS has all along been the people's bank in Singapore, right? And has a higher deposit base from the very beginning. That said, DBS has experienced at least 5 outages this year, the most recent one lasting up to 12 hours. Although the bank has committed to improve the technology infrastructure, the confidence may be lost and people may still switch to other banks instead. Well, only time will tell on this issue. So next up on the price to book ratios, DBS also trades at a premium 1.5 times versus UOB and OCBC of 1.1 times, a good reflection of the higher ROE for DBS itself. Alright, so dividend yield wise, if you don't take into account DBS special 50 cents dividend, OCBC is actually offering the best 12 months trailing dividend yield at above 6% at the time of me doing this video. In the next one, don't forget to smash the like button, subscribe to my channel, and ring the notification bell so you never miss an update on all these stock insights. And in exchange, here's a financial meme for you. But not least, let us take a quick look at the growth prospects. First off, DBS has successfully integrated Citigroup's Taiwan retail business, but a big but here, it has sort of let down the Singapore home base with the repeated digital disruptions. While I'm not sure how big the impact of the MES penalty will be, based on the analyst reports and my own sensing, the impact will be kind of limited. Over to UOB, it has acquired Citigroup's consumer banking segments for 4 Southeast Asian countries. Integration is still underway, and management is expecting that the 4 markets will contribute 1 billion Sing dollars in revenue boost once it's completed. Lastly, for OCBC, it is still kind of muted because there's not any significant acquisition since 2019, and it has continued to grow organically and maintain a tight lid on the expenses. After all the number crunching and looking at the qualitative aspects, I would say that UOB is my preferred pick out of the three local banks at the moment. Let me explain. Okay, so first of all, UOB's recent focus on the lifestyle deals where the UOB cardholders can enjoy an exclusive pre-sale for the tickets to Taylor Swift and Ed Sheeran's concerts has shown that UOB managed to carve out a niche compared to the other banks when it comes to credit cards. Personally, I think this is a really smart move because getting people to sign up for the credit cards by themselves is the first step to more cross-selling opportunities in future. In fact, based on my personal experience, my family has always been using DBS and OCBC services, but we recently pivoted to UOB given the attractive credit card rebates. And from there, right, we have opened the UOB savings accounts, downloaded the UOB Tomorrow app to take advantage of the rewards, and many more. So lastly, in general, while DBS has better financial metrics, I feel that UOB is more reasonably priced at 1.1 times price to book ratio, and also not to forget the above 5% dividend yield. What about you? Which bank stock is your preferred choice? Let me know in the comments down below. Do remember to help me smash the like button and subscribe to my YouTube channel for more videos like this one. And don't forget to check out this video over here talking about 5 Singapore stocks trading near 52 weeks low. With that, I will see you in the next one. Thanks for watching and ciao.